So, good evening. We are starting this segment of Business Show where we'll be giving you information about, business and investments. Our first guest today is Pius Moshiri, who is the Managing Director of Nabo Capital. Good evening, Pius. How's your day?
Good evening, Ken. It's exciting to be here, and thank you so much for the invite.
Thank you for coming. And today we'll be talking about shares, trading in shares. We really want to get to know how people trade in shares, what we need to look out for, and you'll be breaking down this for us. Where do you start? You are a novice. You really want to know how to trade in shares. How much do you start with? Maybe you can start from there.
So thank you, Ken. I think it's a question that everyone who is interested in investing has to answer at some point. And I'd say the first and foremost thing you need to do is to set up an account. And to do that, you need to visit a licensed broker. You go there, they will give you some forms you fill, or they will even actually help you to fill. And it's a very short process. And once you have an account, and you can start giving instructions to your broker as and when you want to buy, and as and when you want to sell.
Are there rules like where do you go to look for a broker? Like, how do you know this is a good broker, or should I choose this broker to go with? Is there some kind of guidelines you can give us?
So I would say the best source of that information is just go to the CMA website, because all brokers are licensed by CMA, and also that makes sure that you don't get caught up with the wrong people. So just go to the CMA website. You'll see a list of licensed brokers and investment banks. From that list, you can check around with people like ourselves who can recommend a broker or brokers that we have had experience dealing with, and we are confident that they will not disappoint you, and the experience will be great.
Okay, so people think that you really need to have a lot of money to get into the stock market. Maybe you can just break it down for us. What's the minimum amount of money you need to start buying shares?
Really, actually, it's not even about amount of money. It's you are allowed to buy a minimum of 100 shares. So if a share goes for 5 shillings, you can actually start with 500 bob. If a share goes for 100 shillings, then you can start with 10,000 bob. So really, the minimum that is set is the number of shares, which is 100, and you can see it's quite accessible to any ordinary Kenyan.
Okay, so now someone has gotten a stock broker. They're inside the market. They're looking at what shares to buy. Where do you start? What should you be on the lookout for? You are very new in the stock market. What are some of the things that you really need to start looking out for?
So, it's a good question. Buying shares is not betting. First of all, I know Kenyans love betting.
Yes.
Buying shares is not betting.
Okay.
Buying shares is really buying a solid company. And what are shares? Shares really give you part ownership into a business.
Okay. And
the key question that you're asking yourself then is, how do I identify a good business? And maybe a good way of answering that question is also just to give an analogy, and I can use some examples of companies that we have in the stock market. So today, BAT, for example, is trades at about 600 shillings thereabout. Safaricom trades at 29 shillings thereabout. And the question on your mind is, Ken, what is the best? Which one is the cheaper share to buy? Because everybody wants value for money.
Exactly. Yeah.
So you can see, if you're thinking like a layman, you might say Safaricom is cheaper, because with the 600 shillings you can buy one share of BAT. With the same 600 shillings you can buy 20 shares of Safaricom. But that actually is not true. It's not necessarily true that Safaricom is cheaper than BAT. And for the sake of listeners, let me just put a caution. I'm not recommending
Yes, you should be
anything
careful,
here.
yes.
I'm just giving
Just for
examples.
yeah.
I'm just giving examples.
Mhm.
So the most important thing then for you to identify a good company is to identify a company that has a good cash generation power.
Mhm. And what does that mean?
So that means when a business is successful, how do we know a business is successful?
Makes a lot of money.
It makes a lot of money,
Yes.
and that money is cash.
Yes.
So if you follow the cash, you will find a good company.
Okay.
Okay.
And cash is do you mean profits?
And cash profit is actually a very good indicator of profit.
Okay.
But there are some things we normally do
Okay.
as professionals to adjust profit to actually identify the actual cash that the business generates.
Mhm.
But yes, to a layman, I'd say profit is a good,
Start with profits.
is a good indicator of profit.
Okay.
So let's go back to our example.
Yes.
With one 600 shillings, you can buy one share of BAT,
Mhm.
and you can buy 20 shares of Safaricom.
Yes.
But let's look at their profit. Safaricom made a profit of 55 billion shillings,
Mhm.
the last announcement, and BAT made a profit of 3.6 billion shillings. Again, you can see now it has changed the other way.
Yes.
That means it will take BAT 15 years to make the kind of profit that Safaricom has made in one year. In 1 year.
Okay.
So now
Now it gets
even more interesting.
Yes. Yeah.
it gets interesting.
Okay.
It means that Safaricom has a higher potential of generating cash than BAT. It takes 15 years for BAT to generate the same cash as Safaricom.
Okay.
Now, in the stock market, you're buying at a price. Now, the question is, which one is cheaper? So there is something that we normally, let me digress a little bit. Allow me to digress a little bit.
Sure.
When you go to the hospital, what does the doctor do first? What do they check first?
There are indicators, your blood pressure, they look
Blood
at
pressure?
weight, BMI, they look at
Exactly.
yeah.
So they will look at your temperature,
yes.
and they look at your blood pressure.
Yeah.
Why? Because those are indicators of your health.
Yes.
So in our business, when you want to know which share is trading cheaper, we look at what we call price to earnings ratio.
Mhm.
So that is like our blood pressure indicator.
Okay.
So and price to earnings ratio, some people call it PE,
PE ratio, yeah.
means how much are you paying for every shilling of profit. So Safaricom was making 55 billion shillings. How much are you paying for one shilling of profit? And from the numbers that I just looked at in the morning, Safaricom, you are paying 21 shillings for every shilling of profit. And BAT, you are paying 18 shillings for every shilling of profit. So which one are you paying higher than the other?
It's of course Safaricom.
It's Safaricom.
Yeah.
That means if you were to just very high level say which one is cheaper, we can say BAT
Actually,
is
BAT
cheaper.
is cheaper. Yeah.
BAT is cheaper.
Yeah.
Another thing that you can also look at is dividend yield,
Mhm.
meaning how much dividend do I get out of every shilling that I invest.
Mhm.
Let me say every 100 shillings that you invest. For Safaricom, if you get 4 shillings for every 100 shillings you invest. For BAT, you get 4.3 shillings for every shilling you invest. So you can see now you've gotten
A fuller picture.
Yes, of what would be a cheaper.
Where do you get this information, the PE ratio? Where should
So you
go?
It's a very simple thing. You just take the profit that the company made, and you divide it. You divide it by the number of shares, and that is what you call earnings per share.
Mhm.
Actually, it is always available on the financial statements.
Yes, that's what I needed to know. Is it something
Yes.
that we can go and check
Yes,
it up?
exactly.
Okay.
Just simply go look at the stock, the price it's trading at today. BAT is trading at 600 shillings.
Mhm.
Just divide by the earnings per share, and right there you have your price earnings.
Okay.
Yeah, it's a very simple thing.
There's also the issue of looking at the projections, the future of the company. Where is the company going?
Exactly.
And how are you how is this information important to investors?
Exactly.
Yeah.
I'm glad you've asked that question,
Yeah.
because what I've just done is to simplify
Yes.
for the audience. But there is much more than just looking at price to earnings ratio. There is a reason why some companies, why investors are willing to pay a higher price for 1 shilling of profit. One of the reasons is when they see that there is better future prospect or growth potential for the company, then everybody runs for that particular share, and you're willing to pay a premium because it has potential to grow faster.
Okay.
And that is how we consider the future. So if we are convinced that a company is going to be growing very fast, then you'll notice that the price earning ratio will tend to be higher than the others.
Okay.
Yeah.
Then there's the issue of, the investors want to get in, get their money and get out.
Yes.
And they'll do this by, buying a share when it's very low.
Yes.
And just wait it out for maybe months or years.
Yes.
And then they get out with massive profits.
Yes.
How would you recommend, how would you categorize this kind of investors?
Yes.
And what would you advise? Because there are people who are really getting in just to get money.
Yes.
So what's the approach?
Yes. And all of us, we get in to get money.
Exactly. Yes, of course. Yeah. How soon is the question?
The thing is that we have two kinds of investors.
Yes.
And again, I'm oversimplifying things here. We have investors who you generally call them buy and hold investors, meaning I buy Safaricom and I hold it, and it continues growing, and I even pass it on to my children, and they continue enjoying the dividends. We have other kinds of investors who we call traders. Traders, they buy the stock, it goes up, they sell, it comes down, they buy again, and they can do that within a day. Buy and sell within a day. So we have you can call them short-term investors and long-term investors. You have to identify what kind of investor you are. I would say for you to be a trader, you need to be a real professional. You really need to know what you're doing. You really need to have good systems behind you, so that you can make quick decisions very quickly. But for me and you, who you go and you're doing a very different kind of job. You run a kiosk somewhere. Then trading may not be your kind of way of participating in the stock exchange.
There's this talk on that if I bought this share, let's say for example KQ, if I bought it like 6 or 8 months ago, it's now gone up, I'll have made X amount of money. There's this kind of outlook for some people who are investors, but what are the fundamentals? What are the fundamentals underlying this kind of movements in terms of shares? What makes shares move from point X to point Y in such a short time?
I think at the end of the day, as I said, the cash is the lifeblood of a business. Every business. The business that has higher and higher prospects of generating cash, then it means an investor will take a view today, and then will invest because he will expect the cash generation will go up and the share price will follow. Now, if you look at, for example, KQ, there are quite a number of efforts going around just to turn around the company. There are also other people who've taken a view, for example, that it is a strategic asset, so there is no way we can let it go under, which means government might pump money in, and that means more cash into the business. That means better prospects for the company.
Exactly.
And therefore there are those kind of investors who actually go for companies that are almost dying, and then they turn around and they make a lot of money.
Yes.
Yeah.
And they exit.
Yes.
Okay.
We call them vultures.
Vultures.
Yes.
Okay. So just to wind up, even as we look at what's been happening in the Nairobi Stock Securities Exchange, how will you compare that what is happening in at the NSE and other markets? We have Ghana, South Africa, Nigeria, neighboring countries. What are the opportunities? Is it possible for a Kenyan to invest in other markets if they are doing better? and how easy is it to do this? Yeah.
It's very, very easy to do this, and one proponent of investing across Africa, because it's not just happening in Kenya, it's happening across the continent, and we have been investing across the continent for almost 10 years now. And if I would I would give examples. Last year, Ghana was one of the best performing markets. This year is still one of the best performing markets. Kenya did very well, but Ghana was
Ahead.
performing better. We've seen markets like Egypt; they have turned around after the long recovery after Arab Spring. They are doing well.
Okay.
Nigeria has bounced back also very strongly this year and part of last year, and so it is happening. We are highly correlated. I would say that when you see Kenya doing well, it's most likely that other markets are also doing well. And maybe also just to mention, today in Kenya, about every day we trade, about 60 to 80% of the trades actually happen driven by foreign investments.
Yes.
And that means also we can also be able to do the same in other markets. We are foreign investors in other markets. That means opportunity is not just in Kenya, it's across the board.
That's a good point to finish. But just to wind up, as we just summarize, cash is king. That's what I hear.
Yes.
We look at the PE ratio.
Yes.
And of course, we look at the future and the prospects of a company.
Yes.
Thank you very much, Pius.
Thank you very much.
Thank you. I'm sure our listeners will have questions after this. We'll invite you back to answer some of these questions.
Thank you, Ken. I've enjoyed this.
Thank you very much. We've been talking to Pius Moshiri, who's the managing director of Nabo Capital. He's been talking about shares and how to trade and what to buy, what to sell. Not exactly the shares, but the process, what to look at. So he will be joining us soon for another subject. Maybe you can just drop us a question, a comment. What do you want to know about investments? What do you want to know about wealth management? What do you want to know about how personal finance? We'll be having this conversation every week. So you can join us here at Capital FM. It's been glad having you.